Welcome to The Missing Link, a podcast where crypto and insurance come together. I'm Dan Roberts, and my co-host is Danielle Wall-Elliott. Whether you're in crypto, traditional finance, or in need of a new podcast, The Missing Link will help you explore the vital role that insurance plays in crypto and how blockchain will disrupt insurance. Join us on our journey to find the missing link. Hello everyone, this month on The Missing Link we speak to Jaskanwar Singh of UnoRe. He talks about the need for more capacity, the experience that UnoRe have picked up over the last few years, their desire to bring in more opportunities for capital to access uncorrelated risks. We're also very excited to discuss the upcoming Nayms and UnoRe collaboration, and of course his missing link, which almost gave Danielle a heart attack. This is an exciting one for us. It's the beginning of our sponsor series, so expect more on this conversation to come. We hope you enjoy. Hi everyone. Today on The Missing Link, we have Jaskanwar Singh, co-founder and CEO of UnoRe. UnoRe kicked off as a decentralized insurance protocol in 2001, March, and has been doing all sorts of exciting things since. Prior to UnoRe, Jas was the CTO of the third largest health insurer in Dubai, and has lots of exciting, interesting stories about that process. What's very exciting for us, myself and Danielle and the Nayms team, about this particular conversation is it kicks off our sponsor series. For us, we want this podcast to be a place for our specific Nayms sponsors to come on and speak about the work that they're doing through Nayms. To remind everyone, a sponsor at Nayms is this role we delegate to users of our platform to run cells on the Nayms infrastructure. A cell being an on-chain balance sheet where these sponsors can access capital, raise capital for their particular insurance programs, whether that's reinsurance, some primary insurance, captive, quasi-captive type purposes. So this sponsor is really the core central actor of our marketplace that is building an insurance program, raising funds on the supply side, and writing risk on the demand side. And so, it's a flexible title that allows them to delegate underwriting and broker services to other players within the system. So, Jas, welcome. Thanks so much for being here. How are things going?
All good. Thank you so much for having me, and thank you. You're far too kind with the introduction. And,
nice. Well, very excited to hear more about your story. Great to have you.
Before we get into the nuts and bolts of everything, just a few questions to really warm you up and introduce you to our listeners. We ask each of our guests to rate themselves on a scale of 1 to 10 on their crypto knowledge and also their insurance knowledge. So if you could kind of tell us and explain why you're rating yourself those numbers.
So I would say 2 years ago, I would rate myself like 6, 7 on the insurance knowledge, because there's a lot of risk-based stuff that you don't know. There's a lot of actuarial mathematics. Being from an engineering background, I see 10 as somebody who understands all of that, close to a 9, and then add in the business knowledge. So I would 2 years ago rate myself 6. And on crypto, I'd rate myself even lower. But now, being in the space for quite some time, I would say I'm 8 on the crypto scale, but I might have, I would say, digressed a little bit on the insurance scale, because maybe 6 or 10 now on the insurance on the insurance scale.
Nice. I feel like all the guests rank themselves very cautiously. It's no, you're an expert. We know what you know. Well, thanks for being here. Like Dan said, we're kicking off our sponsor series. As a reminder, Nayms is a digital insurance marketplace. It's built on the Ethereum network. Our smart contracts allow the supply and demand sides to meet. Insurers are this demand side, and they can put forth a yield-bearing business plan on any type of insurance. Obviously, crypto is a natural fit for us and a great place to start. And the supply side being the crypto capital providers that can earn real yield and actually participate in this market now, and invest in these, risk vehicles. So we thought that we would, dig deep into this and start by asking you, take us through your journey of assessing what risk to cover in the crypto space.
So there are quite, I would say, a myriad of risks that are within the crypto space. The most important, and I would say the one that needs immediate solving, is the smart contract risk. So we always say that there's this revolution that we want to create. We want to have the next 1 billion users use smart contracts for settlement. Obviously, there's like a lot of benefits to it. That you don't have Saturday, Sundays. You don't have working hours. Settlement happens on its own, on-chain execution, on-chain arbitration, etc. However, when you do everything on-chain, there's also the fact that if you've written like something inaccurately, and on the dev side, we mean like it's a bug in the code, right? Then the money is also governed by that bug itself. So if we want to be able to onboard the next 1 billion users, we cannot expect like my grandma or your grandma to be worried about, oh, what if I send money to this contract, or I put money in this quote unquote savings account, like because Aave is like a savings account, right? Or like any other yield bearing protocol. So you don't want them worrying about the infrastructure falling apart, because that's something that they don't worry with the bank. And when we're like moving on to this next frontier, right, which is Web3, we cannot be giving away some of the advantages that people have been enjoying for like the last 20-25 years. So it shouldn't be like 1 steps forward, 2 steps back. So that's why smart contract risk is the first to be addressed. The second one is, as we're forming the settlement layer, we want to be able to make sure that the instruments that are being settled, such as stablecoins, they are really stable, and some of them are demonstrably not. So we need products that also guarantee stability as well. So I call us wanting to be the FDIC of crypto, because we want to embed insurance in all of these products. So if you're using a smart contract, my grandma doesn't need to know that it's insured, because probably she doesn't know there's FDIC insurance on the bank account she's using. So want to move into that direction.
What do you think makes you see that as an opportunity versus maybe more traditional insurers seeing it as, too big of a risk or something that's scary?
Well, there's 2 sides to the coin, right? You mentioned the knowledge part earlier, right? Like, I mean, if an insurer is coming into the space, like probably they'll have like zero to no crypto knowledge, even if they get like a big 4 consultancy firm to look at it. Like, I would be really surprised if any one of them have even deployed a smart contract itself. So we are native to the space right now. So we as a team, we understand what sort of risks are there, and it's similar to like Uno going and saying like, is life insurance I would say risky? Like, I mean, like I read the newspaper all the time. Like someone or the other like is in an accident, something happens. So when you look from an outside perspective, like when you're not in that line of business, it would seem risky. So the reason that we are the best, I would say, best suited to cover this kind of risk is because we've been in the space for a very long period of time. 2-3 years is a really long period of time for ensuring crypto-based risk, because I mean, real smart contracts out of the ICO stuff have been only out there since 2020 when the DeFi boom was there. So we've been operating since early 2021. So like been in that space from that time itself. And the reason it's in the other side of the equation is it's an opportunity for us, because you won't be able to charge these rates that we're charging right now, like 5-6% on risk 10 years from now. So we're here early on capturing this yield and spreading it out to capital providers such as yourself.
Nice.
Mm-hmm. That's cool. It's like the peace of mind layer to the internet. And I'm interested to see how not just embedded insurance where a user can buy their insurance as part of a separate workflow that they're going through on the internet, but maybe there are some interesting ways that kind of protection can be built into the products that they're using, so that they don't even perhaps know that they're buying it, so they can opt in, but then it's already built in. I think a smart contract piece that you mentioned. Can you have is it in the form of a wrapped stablecoin? The wrapper being your insurance protection, so you still have all of the stability and transaction benefits of a stablecoin, but there's that insurance element to it, and the wrapper points to capacity that's there as defined by the wrapper, and this kind of composability of this value exchange that we see within the blockchain space is so interesting. It sounds like you guys are very well positioned for that. Do you find that there are so many new emerging risks and exciting new risks to get behind that it can be a distraction, or do you have a reasonably fixed plan of starting with smart contract, moving into these other areas, and as these other things come up, you're assessing them as you go? What's your process for assessing new risks as they come through?
So that's a very good question, because the space evolves quite fast, but I would say we've grown accustomed to it. I mean, if you look at any sort of risks that come into the picture, the base layer is a smart contract itself. So even if you're looking at a stable coin and we're providing like a deep peg coverage to it, it's still, if it's an on-chain stable coin similar to DAI or like Frax or something like that, the risk or the collateral is housed on-chain, and the collateral will be housed within the smart contracts itself. So it forms part of the base smart contract layer. It's just you could make it different, specialize itself. So once we've understood and we've I would like to say that we've acquired the expertise of being able to analyze smart contracts, rate risk within the entire ecosystem based on the permissions, etc., that are granted to that particular smart contract, how similar it is to a known framework, has allowed us to basically evolve along with how these new technologies come about. Also, there's this I would say there's this point that whatever new frameworks come, so let's say recently we had the Vault framework, which is ERC 4626, which was released as part of like Ethereum improvement proposal. So you just have to like look into those, try to understand the framework, because like as we saw with ERC20, we know like this will be the source of, I would say, at least like a lot of new protocols that will be building on top of this framework itself.
Yeah, you sound more organized than I would be. We got to cover this, and the NFT players came through, and so there's underlying utility to NFTs that will continue past some of the hype that we saw, but lots of conversation around NFT insurance and so forth. Correct. And it feels like a good place to start that kind of underlying smart contract piece, which will filter into protection coverage for all sorts of other types as well.
Well, for me, it feels so inspiring to hear you talk about this in a way that you're saying, like, yes, we've made ourselves become educated. We're keeping up with the space. I feel like we kind of sit one foot in this insurance land and one foot in the crypto land. And, we go to the insurance conferences and it feels so unknown, or it feels so scary. And so hearing you, I've got this big grin on my face. Like, yes, like it's an opportunity. It's not something to be scared of. If you just kind of buckle down, educate yourself, it's always changing. You got to keep up with it. We're not saying it's going to be easy, but it's going to be necessary, and finding it a way to have it be, built in so that our grandmas, so that our parents, so, everyone can just feel more comfortable using it. It's going to promote that mass adoption. That's what gets me inspired to get up and work in the space.
Yeah, Jazz, when do you think the first crypto insurance conference at scale is going to be? When's that overlap going to be big enough to attract the masses?
I think it's going to take 5 years, bro.
Okay.
Yeah.
Fair enough. Maybe
I would hope. I was going to say that exactly. I would hope Nayms and UnoRe are co-sponsors of it.
That sounds good. Or just the organizers.
See you there.
Yeah, for sure. Very cool. Well, speaking about UnoRe and Nayms alongside each other, perhaps you can, give our listeners a bit of insight at this stage into what is coming up for our collaboration. What your plans are there, what excites you, over the next kind of year or two as we scale this out.
So in order for me to provide a little bit more context, I can explain the problem that we were facing and the reason why the Nayms partnership came into the picture. So about a year ago, we realized that the demand for insurance that we're seeing outstrips the supply by a huge margin. And the second issue that we were facing was that we had the USD collapse, and that's a stable coin for all the users, which was supposed to be stable but was not. And some people had purchased insurance from a whole lot of providers, including UnoRe, and we were able to pay out because we did proper risk management. Coming from an insurance background, you use uncorrelated products. It's supposed to be how things are run, but some insurers obviously did not do that. They were over leveraged on this, and what happened was that users who had purchased insurance from those select insurance providers, they had an issue where the claims were denied on the outset, and they went to a decentralized court kind of a situation, and then the claims were not very well handled, but at the end of it, the claim was paid out. But there could be another, I would say, iteration to the story in an alternative universe where there was no money, the claim was not would have not been paid out, and the people who basically bought the policy would be left hanging dry. And a lot of people started realizing that there is a conflict of interest because the capital providers are the ones which are basically voting on the claim process itself. And there's a reason why courts exist and insurance laws exist in every country, basically. You have laws, you have a regulator which is dedicated to insurance, and I would say most of the countries that I have operated on, because it's a promise, right? And insurance is a promise, and it's a regulated promise. You cannot take the regulation out of it. So what we realized was that with Nayms, we can work out to set up a regulated cell. I'm sure your viewers would understand what that is. That would allow us to be able to tap into the institutional capital area because we have expertise in risk management and selling policies, and that would take care of the demand side of the equation. But also, it would give an avenue to the crypto insurance purchasers who are native to the crypto world to be able to buy something which is backed by, I would say, a real legal insurance company, which is not the case in any insurers out there. There is no insurer which is legally regulated to be able to sell insurance. It's either a mutual-esque kind of a product, or where it's just everybody's part of the same mutual. If the mutual has money, you get money. If the mutual doesn't have money, you don't get money. So there's no reinsurance attached to it. There is no capital protection built into it. So with Nayms, people would be able to buy a policy which can be at a premium because of all the regulation. It costs money, right? It costs money to set up a cell. It costs money to have the lawyers, I would say, do the due diligence. It costs money to raise the capital itself. So it can be at a premium, but it's actually the people who buy the policy can sleep with a sound mind that if the claim comes in, this claim will be paid out, and it's going to be backed by a regulator which has experience in managing this, which is the BMA.
Yeah. Well, what's exciting for us is it's not just even the regulator, having the smart contracts allows that. You talked about this idea of trust, or, needing to having the regulators, that's kind of a centralized form of that trust. But for us also to have the smart contracts built on top of it, it's that the capital is going to be there to pay out the claims. That when the premium comes in, the premium is going to be split to, each user, each participant, each person gets their cut of the premium. So, it's a double whammy of trust. Yeah.
Yeah, we like this balance between reinventing the wheel where appropriate and not reinventing the wheel where appropriate. the traditional space has figured out a lot of problems of how insurance should work over the last 300 years. And a complete, refresh of that isn't needed. But what's powerful is, the coming together of those that are, coming up with these totally new systems for protection, communities, technology, how that all works together, combined with, what we'd like to see ourselves as the kind of regulated bridge to back some of these interesting ideas. And how to do that at scale as well. Insurance benefits from the law of large numbers, and really, we need to see billions and billions of dollars of billions and billions. Just I'm a specific numbers oriented guy. But yeah, a sizable amount of supply side, flooding into these types of risks for them to be priced efficiently. And for that kind of validation that this kind of cover is going to be there to be there. So yeah, that's why this particular collaboration is very exciting for us. So yeah, lots coming up, and I guess with that in mind, any nod to what kind of maybe not specific numbers around yield, but the opportunity for capital markets. For us, we're trying to pull down the barriers for capital to access risk, and it's saying the insurance-linked security market was created to securitize catastrophe risk primarily, so that capital markets could invest directly in that type of exposure. We want to expand that to all of these other exciting areas, yours being one of them. What does the opportunity of the UnoRe cell look like for that capital?
So for us, we've identified that. So even at the worst of what we call the bear market, and I hope it's the bottom at that period. Yeah. So the DeFi market in terms of the TVL was still close to $52-53 billion, and that the insured market segment is less than 1% of that. So 99% of the entire TVL on chain, on ETH itself, and this is just on a single chain, albeit the largest, is uninsured. So for us, we realize that even if it's the bear market, we have a lot of work to do. We're going to be working to get this, billions and billions of dollars, numbers guy as well.
Thank you.
To get, I would say I'm vouching for the numbers that you're saying with what your goals are. In terms
you
of
can quote me on that research as well. It took me a long time to
So we could reach large numbers, and it also adds into what you said in terms of efficient pricing. So right now, the pricing of risk in the crypto market is absolutely inefficient. You have a protocol which is priced at 2-3% risk, and the fork of the protocol, which is exact same code, which is priced at 8 or 9%, and it completely doesn't make sense because the chain is similar. You're obviously not covering any sort of private key breaches, so any team related activities are out of the picture. So smart contract to smart contract, same smart contracts, and you have a 4x differential out there itself. And the reason is because the supply of capital is very less in the market, so people are not willing to stake because they don't understand the risk itself, and and it's not their fault because, as I said, in the last 1 to 2 years, what they've seen is that risk management has been taken lightly by insurance protocols because they're not operated by insurance people who have insurance experience. So they operate insurance at a degen level. You cannot be putting all your capacity or 60 to 70% of your capacity on a single product. And obviously, when that product blows apart, you would be looking at a claims exposure which you would have not mathematically accounted for. So if we have let's say 30 or 40 insurers doing this, and each of them has a book of let's say half a billion dollars each, right? We would be close to reaching efficient pricing. But right now, we're nowhere near it. because we always, as UnoRe also, we have to price at a higher range to be able to account for any sort of like abnormalities that can come, because you don't have a lot of data. Like the risk is so young to price in. So those are the things as well. That's the reason why we're like doing like a pre-launch of like Uno Watchdog, which is like a comprehensive security solution. I can talk more about it, but it's like not it comes in with the embedded insurance product. So if it's relevant, I'm happy to talk about that.
Yeah, absolutely. I think, for us being a marketplace, it's great for us to say, oh, we can capture this for sponsors and the capital providers. But what about the people who want insurance on their crypto? So I think please do share, where can people find you and find insurance policies themselves, and then maybe go into that one more specifically.
Sounds good. So what we have with UnoRe right now is that so we launched around 2 years ago. We have launched two versions of the app. Right now, the smart contracts basically, and we have the app live. They allow you to basically purchase insurance, so you can go B2C, scan your wallet, all your LP tokens are there, and we have basically associated the LP tokens. It's beautiful, I would say, result of composability in the space with their underlying protocols, and it automatically prices them itself. So if you have like USDT, you get DPEG coverage suggestion right there itself. If you have some other kind of product, the suggestion comes to you as well. You could also theoretically go on the protocol and stake in one of our pools and enjoy 20 to 30% returns as well, and participate in the insurance capital activity itself. The Watchdog program is basically, it's a pre-launch product that we've basically released with close to like 7 to 8 partners right now. It's a comprehensive security solution, and it combines 3 very important aspects. So number one is we do a security audit of the entire smart contracts of the protocol. So we look into their contracts, their permissions, deployment scripts, what sort of like abnormalities can come. We test with the production contracts as well. So comes with an audit, and it's not like a stamp like the other audits basically give. So like a fun fact, half of all the hacks that have happened in the last 1 year have been like audited by TRA, so-called TRA auditors in the space. So the first thing that it comes with is an audit for the protocol itself. The second thing it comes with is like comprehensive smart contract monitoring. So we have bots which are set up, which basically notify if there are any interactions from an address which has previous interactions with any phishing related wallets or Tornado Cash or something of that sort. So while a hack is happening, if vulnerability has not been identified in the audit itself, we can go and stop the hack in its, like, I would say, in its tracks itself. So that's the second thing that it comes with. And third, and the most important, very relevant to this discussion, is insurance. So if number 1 and 2 fail, then unlike an auditor, which basically doesn't do anything, when a hack happens, we will actually cover the risk, and we'll make sure that the protocol and their community have basically a bridge to cross over this super unfortunate event. So it's gotten like very good feedback till now. We have like 20 plus clients waiting to be able to access this, but because of the fact that the insurance pool needs to have uncorrelated risks, so we're not able to like accommodate everyone. And super weird. Yesterday, we onboarded a protocol, and they were obviously very like it was like a synthetic asset-esque protocol, and that's a very rare kind of, I would say, breed of protocols that is out there. So they just came into the waitlist like a week ago, and they got bumped up because it's uncorrelated risk. Like we can allocate the capacity, but then there were DEXs and borrowing and lending protocols which were waiting like for three months, and they all got super angry. Like, why? And the DJ nature of crypto, like it's like our private Discord groups were like, why are you doing this? Did they like, was there a bidding war on the premium or something? I'm like, no, we don't engage in that activities. We're just a very, I would say, we want to mention, I would say, inculcate a healthy ecosystem where capital providers feel safe. That's the reason why we're choosing the risks that we're onboarding.
Good problem to have as well.
That's right.
And you're helping us solve that problem, so good for us.
Oh yeah, it's this combination between actual security, whether that's product based or audit based, and then that sort of guarantee that sits behind it. So great to hear.
Yeah, it's like a safety net. It's not just saying, "Hey, this is good." Hopefully we didn't miss anything. You actually have a safety net.
It's the watchdog.
Yeah. So we talked about one prediction for 5 years down the road being a crypto insurance specific conference. What would be some other predictions for about that 5-year timeline? It could be either specific to UnoRe or more broad to this crypto insurance ecosystem that we're building.
Well, I would like to say that our partnership goes live, our cell goes live, and I would like to see at least I would say a few hundred millions of coverage being provided by the cell itself, and it's not just I want to see this happen with UnoRe. I want it where there's a lot of competition in the space. I want more insurers to come in so that people understand the product itself, because we alone cannot satisfy the market itself. I know for a fact there is the space can accommodate close to 10 to 20 more insurers who would be doing more business than UnoRe, than our current business. So there's a lot of availability in terms of product market fit that can be achieved. And the prediction that I would like to say is that embedded insurance becomes a real thing in the next 2 to 3 years. People would be looking for an FDIC coverage. I also think that there will come a point where people will start buying products which are in bulk. So what that means is that you can in a DeFi user starter kit, you will basically have you buy this coverage for $100 and it covers you on Aave, Curve, Compound, all those tier A protocols up to $10,000 of TVL, right? So that's something that it's like a package uncorrelated risk, but quality uncorrelated risk. People would just start buying it, and then it would also lead to capital flowing into those tier A protocols only. It's like an unintended bad side effect, but it is something that could fairly happen.
Yeah, I was thinking of it in terms of centralized exchanges. That's kind of one of my predictions is obviously the places that you can get insurance, those become the bigger centralized players, or they become, easier to trust, kind of what you're saying, this verification or audit. But I love the idea of, then being able to apply that. It's not just the centralized services, it's the decentralized services. You get your starter pack, you get your WAGMI hat, you get an NFT, and you get your DeFi insurance coverage.
Mm-hmm, mm-hmm.
Yeah.
Yeah, because you have, the exchanges themselves are getting their own cover. So that's one type of, insurance pioneering that's going on. But then the users themselves, this space is about, sovereign individuals. They can, they should be able to opt in and out of their own, insurance programs. We need to give people credit, at least a little bit. Sometimes, you feel a little disheartened when you read some of the, nonsense that goes on, but people are smart with their money, and there's more and more people that are coming in that should have the ability to make those decisions. So no, I really like that. More competition over the next 5 years. Certainly for the 3 years plus we've been driving all of this. There's been a notable shift and acceleration of that. But I think that is only the very, very small teeterings of an exponential curve that will put UnoRe in a very exciting place in 5 years' time. So definitely wisdom to say more competition. It's going to be good for everyone. Amazing. Well, as everyone knows, this is called The Missing Link. So we like to say that The Missing Link is an exploration of what may be missing from the from the crypto space to drive these real upticks in adoption. So obviously our take is a whole range of insurance programs and insurance coverage, and scaling capital that's accessing those programs. Outside of that, Jazz, would love to ask you what you think the missing link is.
FDIC. is the missing,
but explain
missing
that
link,
more.
but
You don't mean actually the federal government coming in
no
and doing it.
No.
You're gonna be careful. Danielle was about to end the podcast right there. Amazing. Yeah, and so from UnoRe, how would you expand that?
What I mean with the entire FDIC thing is that capital was fleeing the banks, so FDIC was instituted. And we need to make sure that the protocols which want to retain capital on the crypto side use embedded insurance. And there's like a new ERC 4626 vault standard. And what UnoRe is also working on is modifying the vault standard to embed insurance within itself. So the yield itself would pay for its premium. And I would say this is the missing link.
Wonderful. That's amazing. Well, Jazz, thanks so much for the discussion. Really appreciated your insights there. Very, very excited for the Nayms UnoRe announcement to come. So definitely for our listeners, stay tuned. But yeah, thanks very much, and we'll be speaking to you very soon.
Thank you for having me, Daniela and Dan. Take care.
Thanks. See ya.
We're one step closer to finding the missing link. If you enjoy our show, please rate and review us wherever you get your podcast, and be sure to come back next month. Until then, we are the missing link.